Welcome to our YouTube channel. In this January 2024 update on the Indian economy, we will be delving into the latest developments and trends shaping the Indian economy. We will provide updates on the key areas including growth rate, inflation, foreign direct investment, services, and the global economic situation. Join us as we explore the dynamic landscape of the Indian economy and its implications. Please consider subscribing to our channel for more insightful updates on the Indian economy and other engaging content. Subscribing is an easy and free way to show your support and stay up to date with the latest videos from our channel. Simply click the subscribe button under this video to become part of our community and receive when we upload new content. Thank you for your support. So, let's get started. While a lot of gloomy projections were made for the world economy, the year has played out somewhat better for the world, particularly the US. Certain European economies, including large economies, have been in recession or just on the edge of recession. Indian economy has by contrast come with a spectacular performance. From initial growth projections of around 6.3%, the Indian economy is likely to grow by a robust 7.3% in FY 2023-24. This has happened with a particularly strong growth in Q2. More recently, based on extremely strong high-frequency indicators, RBI has also made similar projections, way above its initial estimate of 6.5%. CPI. On January 12, 2023, the Reserve Bank of India updated its Consumer Price Index inflation forecast for the month of January 2023. The CPI inflation for December 2022 was 5.72%, which is within the RBI's tolerance level of 2% to 6%. The RBI economists cautioned that the CPI inflation for January 2023 may print at around 5.8 to 6%, slightly higher than the levels seen in December. While the RBI governor has expressed satisfaction over the inflation coming down from a high of 7.8% at the commencement of the Russia-Ukraine war, it appears that the RBI would be more comfortable with inflation settling down near to the middle of the RBI's tolerance level band. While the Reserve Bank of India's Monetary Policy Committee has left its key policy rates untouched in several of its previous meetings, analysts will be eagerly watching if the MPC will go in for one final 25 basis points rate hike in February followed by a prolonged pause, or leave the policy rates unchanged again. Now let's talk about the factors affecting CPI inflation. Food prices. Food price inflation, which accounts for nearly 40% of the consumer price index basket, eased to 4.19% in December from 4.67% in November. Core inflation. Excluding the volatile food and energy components, core inflation was estimated at 6.1% in December. Industrial output. India's industrial output rose 7.1% in November compared to a contraction of 4% in the previous month, easing concerns for policymakers. Global factors. The global economic environment, including the reopening of China and potential changes in commodity prices, can also impact CPI inflation in India. The RBI is likely to remain watchful of these factors and may adjust its monetary policy accordingly. GDP. The first advance estimates of India's GDP for the financial year 2023-24 indicate a robust growth rate of 7.3%, slightly faster than the 7.2% growth in the previous year. Last year's growth rate had some base level effect advantages as India's GDP had come down in early 21-22 on account of the second wave of COVID. The growth in nominal GDP during 2023-24 is estimated at 8.9% as compared to 16.1% in 2022-23. These estimates are compiled by National Statistical Office, which released the first advance estimates via its press press note dated 5th January. The first advance estimates serve as the base for the budget numbers and are an important indicator of the country's economic performance. The nominal GDP for the year 2023-24 is estimated at 296.58 lakh crore rupees, reflecting a significant growth rate as compared to the previous year. Both private consumption and government consumption as a percentage of GDP has declined to 56.9% from 58.5% in the previous year and to 9.6% from 9.9% in the previous. The gross fixed capital formation has gone up to 34.9% in FY 23-24, up from 34% in FY 22-23. All these figures are at 2011 to 2012 prices. Foreign exchange reserves. India's foreign exchange reserves continue to demonstrate stability and growth, with foreign currency assets being the primary contributor. The slight fluctuations observed in the past week underscore the dynamic nature of global economic conditions. The overall positive trend in reserves over the year reflects India's growing efforts to maintain a robust and resilient foreign exchange position, providing a cushion against external economic uncertainties. Total reserves. The total foreign exchange reserves stand at rupees 51,324.62 crore. This figure reflects a marginal decrease of rupees 12.32 crore during the past week. Over the year, the reserves have grown by rupees 3,781.98 crore, showcasing robust accumulation. Foreign currency assets. The largest component of the reserves is the foreign currency assets, amounting to rupees 45,484.12 crore. This category has seen an increase of rupees 22.97 crore in the past week. Over the entire year, foreign currency assets have expanded by rupees 3,592.8 crore. Gold. Gold reserves stand at rupees 3,917.85 crore, registering a decline of rupees 31.47 crore in the past week. Despite this recent decrease, gold reserves have grown by rupees 20.29 crore over the year. Special drawing rights. SDRs, an international reserve asset created by the International Monetary Fund, are valued at rupees 1,518.36 crore. This category has experienced a reduction of rupees 3.37 crore during the week, but has grown by rupees 6.72 crore over the year. Reserve position in the IMF. The reserve position in the IMF stands at rupees 404.29 crore. This component has witnessed a decrease of rupees 0.45 crore in the past week, but has grown by rupees 0.06 crore over the year. Now let's look at GST. The Press Information Bureau, PIB, Delhi reported a robust growth in the gross GST collection for the April-December 2023 period on 1st January, with a year-on-year increase of 12%. The total gross GST collection during this period amounted to rupees 14.97 lakh crore compared to rupees 13.4 lakh crore collected in the same period of the previous year. The average monthly gross GST collection for the first 9 months of the financial year 2023-24 was rupees 1.66 lakh crore, reflecting a 12% increase compared to the corresponding period of the previous fiscal year. In December 2023, the gross GST revenue collection reached rupees 1,64,882 crore, marking the 7th month in the year with collections exceeding rupees 1.6 lakh crore. The collection comprised CGST of rupees 30,443 crore, SGST of rupees 37,935 crore, IGST of rupees 84,255 crore. This includes rupees 41,534 crore collected on the import of goods. and cess of rupees 12,249 crore, including rupees 1,079 crore collected on the import of goods. The government settled rupees 40,057 crore to CGST and rupees 33,652 crore to SGST from IGST. The total revenue of the centre and the states in December 2023 after regular settlement was rupees 70,501 crore for CGST and rupees 71,587 crore for SGST. Interest rates. The repo rate in India as of January 2024 is 6.5. The long-term projection for the interest rate is around 5.5% in 2024 and 5% in 2025. The Reserve Bank of India has maintained the benchmark interest rate at 6.5% and is expected to remain at this level by the end of the quarter. Additionally, the government announced revised interest rates for small savings schemes for the January-March 2024 quarter, with some rates being hiked, including the Sukanya Samriddhi Yojana and 3-year time deposit, while others were kept unchanged. As per RBI January Bulletin, the policy repo rate, fixed reverse repo rate, standing deposit facility rate, marginal standing facility rate, and bank rate have remained constant at 4.5%, 18%, 5.3%, 5.25%, and 4.5% for October-November 2022 to 23 Quarter 1, Quarter 2, and 2023-24 Quarter 1, Quarter 2. MCLR increased from 6.13% in 2022-23 Quarter 1 to 7.35% in 2023-24 Quarter 2. The 10-year G-Sec rate is at 7.17%. This is lower than 7.37% in October 2023. The 52-week high of 7.43 was seen on 6th March 2023 and the 52-week low of 6.98% on 29th May 2023. Demand for saffron flax. One of the most important events in the country this month has been the Pran Pratishtha ceremony of the Ram Mandir in Ayodhya on 22nd January 2023. Coinciding with this, several products have seen a sharp surge in demand. The demand for saffron flags and puja products has surged in India for the month of January due to the construction of the Ram Mandir in Ayodhya. The consecration ceremony of the temple has led to a significant increase in demand for saffron flags, with locals reporting a spike in sales. The run-up to the Ram Mandir consecration ceremony in Ayodhya has also led to bumper sales of flowers, 3D models of the temple, and puja samagri. The demand for these products has increased due to bulk orders for decorations from temples across the country. According to a report by the Ministry of Finance, the construction of the Ram Mandir in Ayodhya cost rupees 18 billion. This has been funded through a trust by private donations. The temple is expected to attract around 5 crore tourists annually, which could generate significant revenue for the state of Uttar Pradesh. As SBI report estimates that the Ram Mandir and other tourism plans could bolster Uttar Pradesh's finances by rupees 20,000 to 25,000 crore in tax revenue. The report also sees tourist spending in the state doubling this year compared to 2022, with domestic tourists spending nearly rupees 2.2 lakh crore in 2022 and foreigners spending another rupees 10,000 crore on the state. The international brokerage firm Jefferies also brought a report on the impact of the temple on the tourism and on the economy of Uttar Pradesh. The Jefferies report says the grand opening of the Ram Temple at Ayodhya by PM Modi on January 22nd is a big religious event. It also comes with a large economic impact as India gets a new tourist spot which could attract 50 million plus tourists per year. A $10 billion makeover, new airport, revamped railway station, township, improved road connectivity, etc. will likely drive a multiplier effect with new hotels and other economic activities. It can also set a template for infra-driven growth for tourism. Vibrant Gujarat Summit 2024. According to Ministry of Commerce and Industry, the Vibrant Gujarat Global Summit 2024 was held from 10th to 12th January 2024, and it served as a platform to explore business opportunities, collaborations, and strategic partnerships. The summit was attended by 61,000 delegates from 140 countries, and 35 countries partnered for the event. The summit witnessed the signing of memoranda of understanding for 41,299 projects, attracting investment worth rupees 26.33 lakh crore. The MOUs were signed in emerging sectors such as semiconductors, e-mobility, green hydrogen, and renewable energy. The summit aimed to foster investments, business collaborations, and strategic partnerships, and it celebrated 20 years of Vibrant Gujarat. The summit also showcased the evolution of Gujarat from the inception in 2003 as an event to various seminars and events. The summit aimed to carry forward the national priorities, spreading its reach and vibrancy at the state, national, and international levels. The summit also had a session on Gujarat's roadmap to Viksit Bharat at 2047, MSME conclave, and other events. The summit is expected to bolster Gujarat's finances by rupees 20,000 to 25,000 crore in tax revenue, and it is expected to attract around 5 crore, that is 50 million tourists annually, generating significant revenue for the state. The summit aimed to realize the Prime Minister's dream to achieve developed India at 2047 through e-mobility, green hydrogen, and renewable energy. The summit was a significant event for Gujarat and India, and it showcased the state's potential for growth and development. This event, as well as the more recent event of WEF Davos, continue to highlight the fact that India continues to be the most attractive investment destination in the world. As the global investors find India as the most significant strategic investment imperative, it is essential to stay informed about the latest economic updates. For more insightful content on the Indian economy and other important developments, please consider subscribing to our channel. We will also do special coverage on the economic survey and the interim budget to be presented by the Finance Minister on 1st February. Your support will help us continue to provide valuable information and analysis. That's all for this monthly update. Thank you for watching, and don't forget to subscribe for more updates.